Hello, guys. Welcome back to our Ultima Live webinar for today. It's good to see you guys back here with us again for today. Right. So, before we start, I just need to make sure that you guys can hear my voice all good. So, to let me know if my voice is I mean, my voice is clear, loud and clear enough for you guys to hear me. All right. So yeah, okay, great. All right, basically, what we're going to cover for today is we're going to talk about the gold markets, the opportunity in the gold market next. So as you can see from the slide above on my screens, right, basically, is we're going to cover about whether the gold has been bottom at the 4,000 mark recently, right? I guess you guys have been seeing that the gold is actually hovering over the 4,000 marks recently, right? So we're going to cover about the outlook for the gold markets in the second half of the 2026 and what are the opportunities or what are the trading strategy that we can use for the gold markets in the next few months. All right, so this is what we're going to cover for today. So and again, good to see you guys. My name is Sean, the Ultima Markets Analyst. So there's my some of my introductions, right? So I guess let's start with what we're gonna have for today. Right, so the first thing, of course, before we talk about gold markets, we're gonna have some recaps on the gold price in the past. In the first half of the 2026. Right, so basically, if you guys are actively trading on the gold markets, you would know that in the January 2026, this is where the gold price have hit the all-time high at nearly 5,006 mark. So this is one of the very impressive move. But quickly in the March or near the end of the February, we are seeing a very sharp reversals in the gold price, right? From the 4,000s, from the 5,006 and quickly down to almost like 4,000 something, right? So as you can see from the gold price over here, so it's a very sharp pullbacks in a very short period of time. So we are actually seeing a nearly 20%, 25% of loss in just like almost 2 weeks times over here, right, for the gold markets. And for the highest single day drops, we are actually seeing a near 9% drop as well. Okay, so basically, we are seeing the gold price is actually undergo a very sharp, a very quick period of a pullbacks, okay, or what we could call as a corrective move in the gold markets. So as per we can see from the charts recently, so after the euphoria surge and after the sharp drops, and now we are seeing the gold price is actually down to a consolidations move. So if you study about the technical analysis, you study about the trends. So it's actually a very common scenario that would happen after the price went for a crazy move, okay, and then a sharp pullbacks. And usually after a period of time, the price comes into a consolidations, right? So this is where we are at right now. So usually when the price after a sharp move, okay, when the price comes to consolidations, it usually means that the markets are actually recalibrating for the next move, or we would say the bull and the bears are actually ons and uncertainties. Okay, so this is what we are having right now, right? So for right now, so we actually seeing gold has been consolidating around 4,000 plus, okay, around 4,001. I think this is typo over here. So right now we are seeing the gold price is actually consolidating around at 4,001 to 4,000. So this is where we are at right now. So this, we can see that's how crazy the goal was in the first half of the 2026. So despite of the sharp move, okay, the gold price is actually still on a one of the best. It still is considered one of the best performing assets in the past 12 months, right? If you compare with the others global markets, we compare with other assets. So as you can see over here, basically even though the sharp pullbacks in the past 3 months, okay, in the past 3 months, uh, for the past year or for the past 12 months, the gold price actually still on a strong performance, right? If you compare with the commodity price, or you compare with the US stock markets, or even you compare with the bond markets or something, right? So it's actually quite an impressive move, right? So this is, I would say, this is quite a normal market that we can have, especially the price. I mean, the gold price went for a euphoric move, right? So usually when the price went up, they will come down, okay? And right now, we might come to a part that where the price is onto a consolidations, or what we call as uh, a preparation phase, right? Means that the market is now are preparing for the next move, okay, after the sharp up and then sharp down, and now the market is on the ready on the preparations for the next move. And why would we say that is because one of the reasons is because the gold price right now is actually near to a key psychological marks at near the 4,000s, right? So this is a level where most of the traders, most of the investors, or even the central banks or the institutional funds are looking at, okay, because of the what we call as a psychological effect. Okay, usually the markets are quite sensitive. Okay, through a round number like this, like for example, 3,000s mark or 2005, 4,000, 4,005, all these are a very psychological marks. Okay, so right now we're actually seeing the gold price pullbacks to a level at the 4,000s. Okay, so the focus right now is at the 4,000. So why? Because like we say, a round number usually is a strong psychological level. All right. So right now we might want to look into an opportunity right here. Okay, whether this level can be posed as a very strong support level. All right. Why? Because it's a technical confluence. Usually, price structures like this provide a structural market supports. Means that the person that's selling at the high, or the person that missing out, okay, and then the person that are waiting for the pullbacks, they usually would start to consider to reposition into the markets once again when the price level come into this kind of pivot level. All right. So right now, when the price are into the key level here, so we need to know what are the price movement in the past. Okay, so we want to know whether the market is going to settle down, okay, at this level. So the first thing we got to look at the past is that in the past, okay, when the gold price went up, okay, what are the reasons that boost the price to go up? Okay, so if you look at the gold charts, if you look at the gold charts over here on the past periods, right? Basically, you can see that the gold price is actually on a very strong bullish momentum, right? So I mean, since in 2024, or we put in the considerations that 2025, okay, we start from here. We look at the wave from here, the bullish wave from here, okay, from the 2025, from a year ago, right? Basically, the gold price sees a very sharp move on 2025, I mean the August of 2025, right? So in the past, we see a very sharp move over here. So we need to know about the reasons why the price went up so fast. Okay, so basically we can see that the first thing, of course, is the consistently the dollarization from the from international markets, like from the central banks or everything. So when the markets are trying to de-dollarize, okay, they usually would go into some things that are more uh, representative on a currency. Like for example, the gold markets is always seen as a very important asset in the past since the ancient times, right? So one of the key reasons that the gold price ran up so fast is that the central bank is actually was accumulating the gold, okay, to the dollarize to the dollarize. All right. So we can see that since the 2000 somethings, okay, 2020 somethings, right? We are seeing the gold is actually on the strong bull markets. So this is actually, if you look at the gold reports, okay, you look at the world cost of gold reports in the past, okay, in the past 2 years. So basically, the central banks, they are actually buying gold around 2000 somethings, right? And they keep on going, they keep on buying towards to the 3000s. So this is basically where the level, okay, the entire level that the central banks are buying. Okay, so this is where the central banks, including the Fed or including the emerging markets central banks, are buying. All right. So at some points, when the central bank started buying, and we will see more and more market participants to come in to track on it, to track on the markets, to chase on it. I mean, we will say to chase on the price, right? So when we start seeing the central banks buy, okay, and then we start to see the institutional came in to buy as well, and eventually is when the market get hotter, okay, like everyone is talking about gold, okay, until some days you can see that someone's from the markets or someone from the from a neighbor or someone from your school or from your workplace, okay, they actually heard about gold. They're talking about gold. So this is when the market starts to went into a FOMO state, okay, because everyone is buying. You're afraid that you would miss the opportunity to make such a good fortune. Okay, so this is where eventually the retail traders, the retail investors start come in and boost up the price. Right. So this is where we call as a FOMO price level. Okay, so when the buyers start to come in, when everyone starts to join the markets, and we see the price went up sharply, and eventually, okay, the buyers would run out of steam. Like, I mean, if there's only 1,000 market participant in the world, okay, for example, okay, and eventually these 100 people may run out, okay, so there's no more buyers, and eventually we seeing a sharp drops, okay, and the profit takings and the pullbacks or some things, right? So right, we are seeing the pullbacks over here. So basically, if you look at the chart here right now, the gold market is actually on a strong bull, and right now it's actually on corrective wave. So if we consider this as, I mean, if you look at on the wave pattern or something, okay, you would consider this level as a what we call as a positive wave. Okay, the price keep pushing the price up, or we consider this as a positive wave, and the price keep pushing up, and eventually we would have the corrective move over here, right? So this is what we call as a corrective move, but of course, on the broad terms, okay, on the longer time frames, we will consider this as a pullback phase, and basically the gold are still on an uptrend, correct? So this is where like the bull runs and the pullbacks, so it's still on an uptrend. But if you look at the shorter time frames, or you look at the different time frames, we will see that basically the markets actually underwent a period of a bear market, okay, in terms of the midterm trends or even the short-term trends, you said it, okay. So if you look at the day charts or the 4 hour charts, basically we would see that the price over here are actually turned into a downtrend. All right, so this is where the price comes into a corrections when it went into the downtrends. So when the price comes to a downtrend, and eventually it would slow down, okay, as well. It will slow down as well, okay. So you will start to see a consolidation price. So at this point, we must look at the gold price at a different way. Okay, we need to separate it into a long-term, mid-term, and even short terms, right? So if you study about, if you used to study about, or you used to learn about the multi-time frame analysis, okay, you would know that over a long-term trends, okay, you will still see a different trends on a different time frames, right? So this is the case right now. So if you look from the weekly chart, it's basically still on an uptrend. It's still on an uptrend. It is on an uptrend, and this is a pullbacks. But if you look at the lower time frames, the near-term charts is actually turning into a downtrend, or even or look at the 4 hour charts, it actually went into a downtrend over here. All right, you will see there's a downtrend over here. All right, and if you still look into a shorter time frames, okay, maybe on the 2 hour charts or something, all right, so you will see that right now the downtrends is actually comes to a consolidations or a sideways trends right now. Excuse me. All right, so this is the case right now. So usually when the price, I mean, when if you look at it out short-term trends, when the price come to a consolidations, it would usually means that potentially the price over the midterm trends might comes, I mean the midterm downtrends might come to a bottoms. All right, so this is how we look at the multi time frames. But of course, if you look at broader trends, okay, maybe it's still a it's still it's still called as a downtrends. Okay, but if you look at the charts, we might see potential downtrend. Sorry, because sideways trends over here as well. So means it could potentially over the weekly chart, okay, be the end of the downtrends. This could be potentially end of the downtrends, right? So over here of the charts, as same as well. Okay, you will see these downtrends over here, the downtrend over here, downtrends, higher high, sorry, lower high, lower low, lower high, lower low, lower high, lows, and this is lower high. Right, I'm not seeing the lower anymore. Okay, at this point, right? So this could mean that over the week actually come to the end of the downtrends. Okay, potentially. I'm not saying it's already down, it's already bottom up. Okay, but it could potentially come to a downtrend. So right now, if you are not you are not long-term traders, you are more on the swing traders or a mid-term traders. You might want to look at the forward charts, all right? So over the forward charts, you will see there's a downtrend as well. Okay, but right now, over the short-term trends, we're also seeing a potential bottoms because of the trends is actually moving into a consolidations. Right, so these are parts where we want to look at. Okay, so right now, I wouldn't say the price is actually has been a bottom right. I mean, has already reached a bottom, but it could potentially come to a bottom, okay, at this psychological level. Okay, so right now it's still in an uncertain ones. So at this point, what we would do is the first thing we need to look at the technicals. Okay, we would want to wait for a reversal patterns to form on the short-term time frames. Right, so this is where we want to wait for, right? So we want to wait for a short-term reversal patterns, or at least okay the price to settle down at this point, the 4,000s. So this is the last defend line for the gold to form a bottom over here. So this is where we want to look at it technically. So right now, I repeat again, okay, it's not a bottom yet, but it could potentially form a bottom, right? So this is the first thing, technical level from the technical perspective. So the second thing is we want to look at what are the fundamental catalysts that could provide a bottoms for the gold price, right? So we need to know fundamentally. But before that, the first thing we need to know is we want to know why the gold price went on to a bear market in the past 3 months. Okay, so this is where we want to start to look at. Okay, the first thing, why the gold underwent a bear market. Okay, the first thing is the interest rate. All the interest rate expectations. Okay, because of the Middle East crisis, okay, because of the oil crisis, the energy inflations, all these things, the market right now are start to price in for a more hawkish Fed, okay, to hike in the later of 2026. So when the markets expect the interest rate to go up, okay, when the market expect the interest rate to go up, okay, usually the rising yield would would restrict the I mean would be, I mean would pose a risk or pose a upside what we call it, sorry, the upside uh would have a cap on the upside in the gold, okay, as a non-yielding assets, means that the investor would choose on the other higher yield asset instead of the non-yielding asset like the gold. Okay, so when the interest rate expectations went up, when the treasury yield went up, when the risk-free yield went up to higher level, okay, usually it would pressures the non-yielding asset like the gold. Okay, so this is one of the reasons. And the second thing is, of course, the dollar strength. Okay, the first thing right now we are seeing that the dollar is actually on a strong bullish momentum recently, or in the past 3 months. Okay, the first thing because of the safe haven bids from the Middle East crisis. Okay, from the geopolitical crisis. Okay, the second reason is because of the Fed hike expectations. So when the Fed is expected to hike, usually the rising yield would support the dollar. Okay, so this is the reason why the dollar went up. So when the dollar went up with the gold price in the dollar, usually it will face the impact. Okay, so it faces the impact. So this is the second reason. And finally, it would be I believe this is one of the major reasons, okay, that supports the gold bear markets. Okay, so basically, like what we mentioned just now, the gold price went up is one of the key reasons is because of, I mean, at this point, okay, at the end phase, okay, or at the last phase of the rally, is because of the markets fear of missing out. Okay, everyone is joining the markets, everyone is joining the gold, buying the gold, right? So eventually, when the FOMO went up, when the buyers momentum went up, okay, when there's no more buyers want to buy, or and then the institutional funds is not buying, or the central bank is not buying anymore because of the price is too high. Okay, so eventually the price that on a euphoric state would come down sharply. Okay, so this is the last reason why the gold price went down. Okay, because of the institutional the central banks, they are actually forecasting the or they are or I would say they are expecting the price is overvalued. Okay, so they are not buying anymore. They would wait for the price to come down. So this is the reason that contribute to one of the sharpest move in the gold fall, okay, in the sharp fall in gold price, right? So this is I mean, I would consider this as three major drivers that drove the price down. Okay, so this is the reason why gold underwent a period of a bear market. All right. So so this is how the markets the gold price are fundamentally weak at this point, right? So put back. I mean we look back at the fundamental right now for the gold. Okay. So at this point we're actually seeing the global investors are actually trimming their ETF holding in June. Okay. Basically the gold price is actually on a outflow. Okay, in the June because of still on a strong side. But right now, I believe the gold price may come into a fundamental support at this point. Okay, so the reason why, because if you look at the World Gold Council reports in the reasons, actually the price in the first half of the price still remain a positive inflow. Okay, in the first half, and especially at this point, okay, when the price comes down to this level, okay, the Asia market is actually starts to start uh, re-enter the gold price, okay, re-enter the gold price, and basically the past, okay, when the past, I mean the major seller for the gold price and the gold ETF in the past month is from the North American markets. But if you look at the Europe market, the Asia markets, and the other markets, th- they are actually on a positive inflows. It means that at this point, besides the North American markets, and basically the Euro market, the Asian markets are start to go back into the eco ETF again. Okay, reflects that right now the lower gold price is actually attractive. I mean, attracting the positive inflow into the gold markets right now. Right. So this is one of the key fundamental support for the gold right now. But of course, for gold to actually come back into a bull market, we need more catalysts, more than just a short or just barely once like one positive inflow like this. Okay, we need more catalysts, right? So right now, what we want to look at is whether, okay, the Fed expectations, I mean the Fed high expectations would ease, it would ease or not. Okay, so right now, of course, if you look at the CME Fed Watch, you look at the Fed Fund futures. Okay, you look at the inflations, everything's most of the things are still pointed to a towards the Fed hike. Okay, means that in the short terms, at least in the next 2 months, we are still expecting the gold to be more on a consolidations or a more pressure side. Okay, so at this point, we are not expecting the gold markets to come up yet. Okay, but I mean, we are even though we are not expecting the gold markets to enter the bull markets, but the questions right now we are looking at is whether the price could be bottom out. All right. So technically, the price has potentially to bottom up, to bottom out. Okay, this is the first thing. The second thing is we start to see some inflows in the ETF markets. Okay, so this is one of the positive point. But right now, we are still lack of more catalysts, such as the higher yield are still pressuring the gold, right? So we do not expect the gold to come back on go back to into a bull market in the near terms. Okay, but with that on point, okay, with that on point, we may expect the gold to be potentially bottom up at the 4,000. Okay, so this is where we want to be cautious on. All right. So right now, what we would do is what we will look at is we could expect a potentially bottoms at this level. Okay, means that if you are long-term traders, okay, you are long-term or you are a swing traders, you want to be the early wave of the global markets. Okay, you could start to positions over here. You may consider start positions over here, but of course, we need to have a risk management because, like what I said, okay, you can never predict where the markets may be bottom out. Okay, we cannot predict it. We only can prepare for it. So this is where we may want to consider to look for a bottoms. Okay, to look for a bottoms. But of course, I'm not saying this is a bottom yet. So it means that you don't go all in to long on gold. Okay, you can prepare for I mean, you can try to uh, positions for a good point to go for a long. Okay, okay, but do not go all in yet. So this is what I would like to say. Okay, this is the first thing. But of course, uh, like what I say, usually if you are not the risk taker, you don't want to bet on this kind of level. What you would do is we always wait for a confirmation scenario. Okay, because usually that the market still could have two potential directions yet. Okay, because like I say, bottom the low can be lower. Okay, like low can be lower. Okay, there's never a lowest in the markets. Okay, low can be lower until we see a strong reversal signal in the markets. So usually this is what we can do. Okay, the first thing, if you are if you don't want positions for any move yet, okay, what we can do is we trade on the technicals. Okay, we trade on how the markets react right now at this point, right? So at this point, we are still seeing two potential scenario. Okay, the first thing is, of course, we may still expect the gold through further pullbacks or breakdown. Okay, so because why? Because right now the trend is still technically on a downtrend, so there's still a risk of a breakdown in the gold price. All right. So at this point, if you look at this, you look at the short terms or the mid-term trends. Okay, there could be potentially still another wave down yet. Okay, because if you look at the true technical level, okay, you look at the true technical level, one of the most major supports is actually lies on 3916 or 39 or 3009. We will say 3009 would be the next significant support. Okay, I mean this is still a potential level over here on 3009. Okay, let's put on here. So it means that over the near terms, okay, we could still potentially see the price to have a further breakdown over here. All right. So right now, we may still expecting a breakdowns over here for short terms because of the dollar momentums. Okay, and there's still uncertainty over the CPI, which can impact on the hawkish Feds. Okay, so if let's say we are still seeing we're seeing the CPI came in hotter than expected today. Okay, we might see this hawkish pricing on the Fed against, and this would build on the dollar surge, and then would be impact on the gold price. So we could still see a potential breakdown over here. So in the near terms, okay, you can still prepare for a breakdown, okay, if you're a short-term traders. And if you're not a short-term traders and you want to aim for a bull, so what we can do is we wait for a short-term reversal patterns to form, at least, okay, at least a short-term reversal pattern to form. So this is what we can do is we need to watch the reasons range bound over here, right? So usually this is the first level that I would look at. Let me put on let me bring up my drawing tools over here. Oh, right, one moment. Object, okay, shapes. Okay, let me draw. Okay, so this is the first level we want to look at. Is a range bound that we want to look at. It's around 4001 to 4000. Okay, around maybe like 3973 around this. This is the first zone that we want to look at. And second would be the broader range bound that we need to watch for, which is over here. Okay, so this is the second range bound, right? So this is where I want to look around 4001. Right. So for the near terms, we want to at least see that there is a small reversal over here. So how do we justify this small reversal over here? The first thing, of course, we need to look at the 4001, okay, 4100, this level, this range will be the first signal for us to look at the potential reversal. Okay, so this is the first level. So in the near term, if let's say we are seeing the gold price break out the 4001 and then supported at this level, then this could be a first reversal signal on the near-term charts. Okay, so and especially right now we are seeing the moving average started to consolidate as well. Okay, so if let's say in the near term, if we see there's a bullish breakout above the 4001, then this could be potentially the first reversal signal that we want to look at. And the second one would be this key range. If let's say on the broader terms, okay, if let's say this bigger range bound is actually broken, okay, and this would turns the near term. I mean, this would turns go. I mean, this would bring goals into a broader broader reversal. Okay, if let's say we are seeing the let me draw on this. Okay, if let's say we are seeing the range bound over here, eventually break up. Let me draw one by one because I didn't have the drawing tools with me. Okay, so let's say in the futures the price break out over here. Okay, break out, and then you see this. I mean, if the price break out above the 4002, then we could potentially we could expect there is potentials of a midterms bullish trends in the gold. Okay, so this is where we're going to look at. So the second scenario, we would look for a reversal. Okay, the first reversal, okay, the first reversal signal would be the breakout of 4001, and the second would be the 4002. Okay, so this is where we need to see a breakout to confirm a strong reversal. And at this point, okay, maybe on the day charts, we will start to look at a short-term bull trends for the gold. And at that point, this could potentially be a bottoms for the gold. Okay, and then at this stage, maybe in the later in the Q4 of 2026, then only we could look for a broad bullish continuations in the gold price, right? So this is where we want to look at. Okay, so this is how we can forecast for the gold price on the second half of the 2026. And of course, last thing, whether the price is going to come into a bottoms, we are not sure yet. But this is usually what we can do, okay? Because the first thing, of course, you want to bet on any you're going to bet on the bottoms of the gold. Okay, you want to bet on it. You do want to bet on it. Okay, what we can do is we wait for the trends to form. Okay, we wait for the prevailing trends to form. Okay, then we follow on the trends like what we covered on just now. Okay, we wait for the at least the short terms or the mid-term trends to form. Then only we trade the breakout. Okay, and of course, if you want to position yourself to the bottom for the goal, so you also can do that to buy at the low around 4,000 or something. But remember, always put a strict stop loss on it. Okay, you need to put on a strict stop loss. Okay, it's a mandate because you want to protect your capital. Okay, you don't go all in when the price, the market is not confirmed yet. But of course, even you are confirmed there's a bullish reversal, you don't go all in as well. Okay, always have a risk mitigations and have a risk control. Okay, put on a stop loss. And of course, the last thing is you need to allocate your capital wisely. Okay, means that you do not like go all in full leverage. You don't do that. Okay, you may position yourself with a certain percentage of capital. Okay, usually we would apply 1 to 2% of your capitals to a trade. Okay, means that if you are wrong, then you lose only 1 to 2% per trade. Okay, so this is what we can do, right? So this is how we can prepare ourselves for a potential bottom in the gold markets. And of course, if you do want to take the risk, then we should just wait for a clear reversal, at least in the short term, to form. Then only we trade on the trends and we follow the trends. All right, so this is how we can do. Okay, so basically this is what we're gonna cover for our gold markets for today. All right, so let me know if you guys still have any questions. Right, so I see there's one question asking, okay, whether do you think gold still can break lower? Yeah, yeah, like what I mentioned just now. There's still a chance of breakdown. Okay, because this is why we need to prepare for the uh, for the for the scenario that the price breakdown. Okay, so if you are not if you are day traders or you are short-term traders, okay, then you should still open up for a downside. Okay, means that if let's say one day, someday, okay, or maybe today, I don't know, okay, the price truly breaks down, okay, break down 4,000s, we could still look for a leg down over here. Okay, there's still a leg down, and of course for right now, the 4,005, 4,050, okay, around this area still pose as a very major resistance below the 4,001. Okay, over here still a major resistance over here, right? So at this point, unless we see a breakout over here, the intraday outlooks or the near-term outlook for this week still more on the downside for gold. Still more on the downside for gold. So we are still preparing. I mean, we should still prepare for the potential breakdown in gold price. Okay, if you are short-term traders. All right. Okay, I hope that that answered your questions. All right. So is the interest rates high? Okay. Yes, I believe the interest rates, the rising yields are still the major reason that pose as the pose as the major upside. The major negative catalyst for the gold price, right? So unless in the futures, I mean, at least maybe in the post FOMC in the later months, in the end of July, we're going to have the FOMC or maybe the CPI tonight. Okay, if let's say we are seeing the ease of the Fed hike expectations, means that the markets are not aggressively bet for more hike from the Fed. Okay, right now we are seeing potentially a two hike into the first quarter of 2027. Okay, if the bets on the Fed high ease, okay, means that the Fed are actually delivering a more dovish tones in the upcoming meetings, and we are seeing the falling of the Treasury yield. Then yes, the gold price. This would be the major catalyst for the gold to regain the boom momentum. Okay, all right. So I guess see there's no more questions over here. All right, so I guess this will be the end of our webinar for today. So of course, if you guys still have any questions, uh, just leave it in the chat box. And if there is no more questions, we're gonna end these sessions in another 1 minute. Okay. All right. So thank you guys, and have a great day. And good luck with your tradings. Thank you guys. Bye bye.